Okay, ladies and gentlemen, welcome to the Pantheon Resources webinar. This is the second such webinar that we've done following a very successful one in March of this year. With us today we have Jay Cheetham, the CEO, Bob Rosenthal, Technical Director, myself, Justin Hondras, the FD, and two very special guests, Roger Young and Dan Hughes of eSize. The presentation today will be in two brief parts. The first will be a high-level overview of Pantheon for those of you that are new to the story, essentially explaining who we are, where we are, and why we're so excited about the asset position we have in front of us today. Then there'll be a technical overview of the Shelf Margin Deltaic and the Kuparuk formations. It will be very technical. We recognise that everybody might not understand some of the slides, but I'd encourage you all to sit with it and tune in, because it's a great honour for us and a very rare for an audience to have somebody like Roger and Dan on this call. And then finally, we'll conclude with some questions, kindly curated by Mr. Darkon. We'll address what we can, but I trust you all understand that there is some commercial confidentialities involved in what we have, so we'll do our very best. Now, finally, before I pass across to Jay, and recognising that we do have a new audience, I wanted to make clear one thing, and that is that this is not a new story. Far from it. Pantheon acquired the private company Great Bear Petroleum nearly 2 years ago, at which time Great Bear invested well over 10 years developing these very assets, over $250 million to date, and over 10 years of science and hard work, and we have great continuity. Three of the founders of Great Bear are central to our team today, and as shareholders we get to enjoy the benefit of all of that as we come to the sharp end of this process. So with that, I'll pass over to Jay Cheetham, the CEO, and we'll launch into the presentation. So thank you very much.
Well, Justin, it's a pleasure to be here. We have a unique location right next to the Haul Road and the Trans-Alaska Pipeline. We have multi-billion barrels of oil. We have a great fiscal regime in Alaska with very low royalty rates, between 13.5% and 18%. So we have these great assets right next to the Trans-Alaska Pipeline and the Dalton Highway, which is the Haul Road. We believe we have more than 1 billion barrels that we'll test in the Talitha A well that we'll start drilling next winter. And we have a great management team headed by Philip Gobe, our chairman, who ran Prudhoe Bay for Atlantic Richfield Company back in the day when Prudhoe was managed by BP and Atlantic Richfield. I'm the CEO. I have more than 50 years of experience. Bob Rosenthal, most of you have heard from before. Our technical director, Justin. Patrick Galvin, our chief commercial officer, who has deep experience with the state of Alaska as the commissioner of revenue and land manager. And then eSize, as Justin said, it's a great pleasure for us to have eSize as partners, and for you to hear from Roger and Dan. And I'm going to turn my camera off.
We have a slide in front of us here, and it's really giving some context to our story. Why Alaska? Why the North Slope of Alaska? And the answer is it's home to the USA's two largest oil fields. There's fantastic infrastructure. Our acreage sits immediately below the largest pipeline in the country, the Trans-Alaskan Pipeline. The project is onshore, it's conventional, it's not shale, highly relevant in today's low oil price environment, and there's extraordinary potential. It's host to some of the largest discoveries over recent years, and that's very, very important. So where is Pantheon positioned in this context of Alaska? And firstly, perhaps underpinning the story totally is our break-even price. It's lower than most of the world, and you'll see that in a few moments on a presentation slide. This is the culmination of $250 million spent and over 10 years' work invested into this acreage. There's a commanding footprint, 89 to 100% working interests, incredibly powerful position for us in terms of forward negotiations, farm outs and those kinds of things. We have 150,000 acres and a deep experience in Alaska. Jay mentioned that as he passed over those slides to do with our team. We have 1,000 square miles of 3D seismic. The majority of that is proprietary. It gives us an enormous commercial advantage and a competitive advantage. We're appraising multiple billion barrels of oil in place. It's located, as I said, near to this pipeline. There's moderate drilling depths and no known environmental or social or native impediments to our play. We're in Alaska in a really convenient place to be operating. We have 2 confirmed discovery wells on this acreage and an opportunity to exploit or commercialise very rapidly after drilling. There's 2 main target formations, the Brookian and the Kuparuk. The guys will go through this as we proceed through the presentation, of huge significance to where we are. We're targeting pilot production as early as 2021 from Alkaid, and Talitha #1 well, subject to completion of this farm out. This is believed to be one of the highest impact wells to be drilled globally in 2021. A huge potential for the company and for shareholders. And I think I can hear Jay is back online, so I'll pass back over to Jay.
Okay, can you guys hear me?
Yes, we can.
All right. This next slide is maybe the most important slide that we'll show you today. These are break-even prices, including general administrative and facilities for many fields and basins around the world. And as you can see, starting at the top left, you got the Barnett and the Fayetteville and the Utica. Those are unconventional plays. We've got some of the large UK fields in Tin and Zama. The Bakken is kind of in the middle, the Scoop and Stack going on down to the right, the Eagleford, and the Permian sits just to the left and a little higher, a little above $40 a barrel. And also we've got offshore Ghana and some of the new plays in the offshore North Sea that are in the low 40s. But our break-even, our blended average break-even cost for Talitha and Alkaid is just slightly above $32 a barrel, all in. So we are among the lowest cost. And I would just point out that today, ConocoPhillips announced that they were buying Concho Resources, who have 1 billion barrels of proved reserves in the Permian Basin for $9.7 billion. And as we've said, we are targeting over 1 billion barrels in the Talitha well in a very small footprint. On the right-hand side of that slide, it just shows the acres in units that have been awarded on the North Slope of Alaska. And if you take out the much older legacy fields of Prudhoe and Kuparuk and Alpine, we stack up very well with our just below 70,000 acres with the other Armstrong Repsol units, et cetera, that have been awarded just in the last couple of years. And that's very significant, and the state of Alaska just has said to us, you have a very large unit for a very small company, and that is so true. The next slide is really, I'm not going to go through it all, but this is from IHS Markit. They're a world leader in oil and gas, talking about how the North Slope is a super basin, and it has a lot of room to grow. You can look at this on our website later and get more detail from that. This one I'm going to talk about just briefly, and then I'm going to turn it over to Bob to talk about it in more detail. But you can see down at the bottom the red outline of our 1,000 miles of proprietary 3D seismic. Our 2 units that are basically contiguous to one another. The larger one is the Talitha unit. The smaller one is the greater Alkaid unit. You can see the haul road and the pipeline flowing directly through the middle of the Alkaid unit and on the eastern edge of our Talitha unit. So we can access all of the Alkaid unit from the haul road, and we can access a portion of the Talitha unit from the haul road. And I'm going to turn it over to Bob and let him talk about some of the other discoveries that are shown on that. Oh, wait, before that, Prudhoe Bay sits right up here, 32 billion barrels of oil in place. Next to it, Kuparuk, 14 billion barrels of oil in place. Those are growing, And I would just say I joined ARCO in 1969 because they had discovered Prudhoe Bay the year before. When Prudhoe Bay was originally discovered, DeGolyer and McNaughton did an independent expert report and said there's 10 billion barrels of oil in place, and you will recover about 3 billion of that. So today, recovery looks like it'll be on the order of 14 or 15 billion barrels. So it's more than the original oil in place. And it's just the old adage that big, good fields get better and better over time. So think about that. Prudhoe Bay is going to recover more than the original estimate of the oil in place. So I'll turn it over to Bob.
Hello. So what I'd like to do is highlight some of the recent discoveries, the new discoveries in this Brookian play, which are probably the largest discoveries found onshore anywhere in the world. So just taking a look at the map, you can see way to the west is Kalis Energy. Their 2016 discovery, which has about 2.4 billion barrels recoverable. Now again, that's the management estimate of that. If you look down in an area called the MPR, there's the ConocoPhillips discovery, the Willow trend, which they've announced an estimate of 400 to 800 million barrels recoverable. And then that long linear trend, which is the Oil Search Armstrong-Repsol discovery, which is the Pica Horseshoe trend, which they've announced a 3C of a 900 million barrels BOE. So that's oil and gas. If you look at all those discoveries and you look at the location, if you compare it to where we are on our acreage, the ConocoPhillips discoveries way out to the west in the NPR, they not only have the problem of being in this National Petroleum Reserve, but to move that oil, they will have to build a pipeline and cross a river there called the Colville River. The Oil Search Armstrong-Repsol discoveries, again, to get into the pipeline, the TAPS pipeline, they're going to have to move their oil through the Conoco facilities at probably at Kuparuk, and they've announced that. All of those projects to move first oil, are multi-billion-dollar upfront costs to move first oil. As Jay alluded to, this next summer, we could be moving first oil from our Alpine discovery. Our Alcade discovery, which is right along the Haul Road. And I just want to highlight one thing before I turn it back over to Jay, also, is that Alpine discovery that is just to the west of the Horseshoe Pica trend. And the importance of that is that discovery is usually it's discussed in Alaska as the first discovery using these kind of seismic attribute geophysical techniques to find the oil and then to develop and appraise the field. The two guys that are attributed to having done the original work and to the field development are on the phone today, and that's Roger Young and Dan Hughes. And the exact analysis that they did at Alpine is what they are doing on our acreage. And I cannot stress the importance of the work that they've done and the contribution they've made to the Pantheon team in terms of understanding what's going on our acreage. But so you really have the two guys that really started this on the North Slope working on the project and are our partners in this moving forward. So with that, I'll just move to the next slide and just turn that back over to Jay.
Okay, this is a timeline of significant activities that have happened since we merged with the Great Bear in January of 2019. I'm not going to go through all of them, but as you can see, there are a number of very significant events on this slide. And we were really quiet for a very long period of time while we were doing a lot of technical work and also other work with the state of Alaska. But I will just point out a few of them. The successful production test at Alkaid in 2019, the award of new acreage in, we bid on it in late 2018, awarded later, 2019. The IER for both Alkaid and Talitha are big events for us. The award of the units by the state of Alaska are other big events. So we've had a lot of very, very significant events over the last 20 plus months. Now, we're going to start with a project overview of Alkaid, where we have 100%, Talitha, where we have 89%, and a little bit on Theta West and Leonis. And I'm going to turn it back to Bob because this is a little more technical, and we'll let him take over.
So highlights on this, folks, are two things. And we have two discoveries on our acreage. One where we drilled the well and have tested it, which is the Greater Alkaid. Second, where it is keyed off a well called the Pipeline State well. And again, we'll have a lot of discussion with that with Roger and Wright Young in a few minutes. But we have confirmed that this is a discovery with our own work and with the independent experts report. In the project that we call the Talitha project, which is that's keyed off the Pipeline State well, we have 3 zones that all have hydrocarbon in them, and we're going to be giving you the Kuparuk upgrade, which is the deepest zone that we'll encounter in the well. The Shelf Margin Deltaic has been announced, but we will have some discussion about that today. The slope system, what's called the slope fan, we're still working on that and expect that out hopefully before the end of the year. So when you look at this chart, the really important thing is on the Greater Alkaid, we have a $76 million contingent resource from the IER. Our internal is around 90 to 135 million barrels. In the Shelf Margin Deltaic, I won't go through all the numbers, but we have a recoverable of about 304 million, and in our simulation, we use about 480 million. And we'll discuss a lot about this Shelf Margin Deltaic because, and we'll bring up this point several times, is that analysis by the independent expert is only on a portion of what we believe is the trapped accumulation, but is high graded by all our reservoir stories. So we'll spend some time on that. And what you see here is the new number that's been announced on the Kuparuk, which is about 341 million barrels recoverable in the Kuparuk section. So these are huge numbers. Each one of these, whether it was just the Shelf Margin Deltaic or the Kuparuk on their own, are individual targets would be worthy of an exploration well. But this is, remember, appraisal. This is appraisal. We have a discovery in the Pipeline State. Each one of these would be worthy of a well or a target if you were in like sort of the deep water West Africa or deep water Gulf of Mexico. But we have this stacked, we have these stacked targets. So ultimately, we believe that, in the Talitha project, when we drill the Talitha well, we'll probably be targeting over 1 billion barrels of recoverable oil. And with that, I'll turn that back over to Jay.
So as Bob said, we have a contingent resource from the independent experts Lee Keeling, confirmed an oil discovery of 35 degrees. That's very, very good oil. That's good news for the Trans-Alaska Pipeline. It's easier to pump. It has a much lower pour point temperature with that contingent resource. We're under the Dalton Highway and the Trans-Alaska Pipeline, as we said. It has substantial resource potential to be evaluated because the original discovery well that was drilled in 2015, it terminated drilling in the oil zone because of a weather event, and the Dalton Highway was flooding, and had to move the rig off location while they were still drilling in the oil zone, and you will see that in Roger's presentation. Now, here we show an amplitude anomaly and a seismic line, just kind of highlighting that we have two really well-developed reservoir lobes in Greater Alkade, running essentially under and right beside the highway, so we can develop the entire Alkade discovery from the disturbed zone along the Dalton Highway. We have already been given permission by the state of Alaska to drill our test well from a gravel pad along the Dalton Highway. That is almost unheard of. It hasn't been done in my memory, that without a development plan, the state of Alaska has allowed anyone to put gravel down to drill a well. So we found 450 feet of pay. We perforated a 6-foot interval. That 6-foot interval flowed 100 barrels of oil a day from a vertical well. There was no oil water contact found, as we said in the original well bore. And at the current strip price, our NPV for the Greater Alkade is over $300 million. When Lee Keeling did their report in January, at the then oil price, that NPV was $595 million. And you can see the highlighted section on that seismic line. It's easy to identify. Our modeled well economics from the Lee Keeling report are 2.25 million barrels per well. Our full field development model predicts 30,000 barrels of oil per day peak rate. As Bob said, we anticipate flowing oil next summer out of the initial test well, where we will truck the oil from the well to pump station 1 about 20 miles to the north. We will be able to implement low-cost modular Arctic production system units. They come in 5,000 barrel a day increments, and so we don't have to commit to the large capital expenditure of a full processing unit for the full 30,000 barrels a day up front. It costs you not only time, but extra capital while you're doing it. I'm going to turn it back to you, Bob, to talk about the Talitha appraisal project.
The highlights are billion barrel target. We are close to the highway. We have, we have targets that have proven analogs in the area, and we have multiple targets and independent accumulations that we're going to be targeting in the Talitha well. So if you look at the next slide, this is seismic line, and it's what it shows you is the Talitha trap geometries, but most important for the average person out there is in the pipeline well, we have over 2,000 feet of hydrocarbons in the discovery well. There are, as stated previously, we have 3 independent zones and this kind of billion barrel potential. If you look at the pipeline state and you look at the location of the Talitha well, we are what's known as being up dip from the pipeline state well. the importance of that, if you're sort of not a little bit of knowledge in the oil and gas sector, oil floats on water. If you have oil in the pipeline state well, it's always good to be up dip when you're drilling your appraisal well. And it just so happens where we are locating our Talitha appraisal well, again, with all the work that you'll see in hopefully a few minutes, you'll get a feel for, is we're locating the Talitha #1 well where we expect to have better reservoir than encountered in the pipeline state well, in this Shelf Margin Deltaic, and in the Kuparuk reservoir as well. So Jay stated earlier, the Talitha well is going to be probably one of the biggest wells drilled next year. And I always have to say probably, simply because, I would say it's going to be the biggest well, drilled anywhere in the world, but maybe there will be one bigger. Can't be 100% sure, but, targeting 1 billion barrels is pretty good.
So the pipeline state well was drilled in 1988. There were several factors as to why that well wasn't tested. One, the well basically collapsed on Arco at the bottom of the formation in the Kuparuk. It would have been very, very difficult to do anything more with that well bore. Plus, drilling technologies were not the same as they are today. The pipeline was running at full capacity, and oil prices were very low. So there were several factors as to why the well was not tested. However, we do have a full suite of logs that you'll see later, and it was cored extensively.
I love this slide because it highlights what I said earlier, which is, here's some pictures that show the Alpine field, which is a giant oil field that's already produced 590 million barrels of oil. In terms of the gas, it's probably up to 700 million barrels BOE has been produced out of it. This is the seismic attribute map on the left of Alpine. On the right is our seismic attribute map on the pipelines, on the Talitha Shelf Margin Deltaic, and exactly the same technology and the same guys who found Alpine and helped develop the field are working on our project. And again, their work, Roger and Dan's work, have moved us incredibly far in terms of our understanding of the reservoirs, the geometries, and everything else. I mean, it's just fantastic. The next slide is really, and Roger will spend more time discussing this, but this is really right up to the moment work that they're putting out. And what you have here is a slide that, in very simple terms, is telling you, here's the pipeline state, here's the Talitha well. It is an attribute that is showing where we can expect to find better reservoir. The colors, just how you get there, and it doesn't matter. It is, you have this increasing reservoir quality as you go up into the yellows. We have oil in the pipeline state well. If you look at Talitha, you have these stacked yellow events. That's all you need to know in terms of that location. Their work is telling you, as we go up dip, we are also seeing better reservoir. That didn't have to be the case. Geologically, we always believed that up dip in that area we would expect to see better reservoir, and the seismic attribute work has confirmed that. But this, it is fortuitous that that's what has happened, and we have focused all our sort of efforts with the independent experts is assessing the oil that is up dip from the pipeline state well. But remember, there's oil in the pipeline state well.
Okay, just briefly, I talked earlier about the two additional projects that we acquired, Theta West and Leonis. There's oil confirmed in multiple analogs. We have announced that there's greater than 1 billion barrels of oil potential. We are currently working on that. We believe that will likely be finished by the end of the year, and we'll make an announcement on it at that time. So this is a forecast cash flow from the Lee Keeling model using today's Brent forward curve. And the orange in the bottom is the CapEx expenditures. The blue bars are your cash flow from operations. The upper curve indicates your cumulative net cash flow, and the curve goes negative and then positive is the net operating cash flow, and you can see that very quickly we hit $500 million of net operating cash flow and then kind of stay steadily at about 600, above $500 million a year of net operating cash flow. And by the 10th year, we have generated more than $3.5 billion of cash flow. On the right-hand side, we show what these modular Arctic production systems or maps look like. As I mentioned, you can put them in 5,000 barrel a day increments. They're perfect for a small company like us, so we don't have to commit those huge capital dollars up front. And our chief engineer, our vice president of engineering, Michael Duncan, has used these in Canada. He's very familiar with them. So it's great for us. Just to kind of finish up the corporate presentation, I'm going to be very quick here. We have no debt. We have a great team. We've hit lots of milestones in the last 21 months. We have an acreage position that is unlike any other on the North Slope. We have resources. This is exploitation and appraisal, not exploration. We have 2 discoveries that are independently assessed by Lee Keeling. We're going to drill in the near term to assess both of these. We're going to access the underutilized export infrastructure. The TAPS pipeline at one time carried 2 million barrels of oil a day. It's currently carrying 450,000 barrels of oil a day. Targeting Q1 for more than 1 billion barrel targeted well, and the next 12 months of activity is set to leverage the $250 million that has been spent on our intellectual property to date, as Justin stated earlier. So now I'm going to turn it over to the stars of the show to take you through the rest of the program.
But before you do that, I'd like to make just a couple comments. This is Bob Rosenthal. And I really would like to make a few comments before we turn it over to the guys. And they are the stars of the show today. But, we've just gone through, 30, 40-minute presentation, technical, corporate. But, and we've highlighted the bullet points at the end. But I think, I'd really like to just say just 2 or 3 things to take away from it all. One is the idea of us having a 1 billion barrel project here on our acreage, it's enormous. It's world class. And it's not outside of the norm for the North Slope. The largest discoveries in the world that have been made onshore, certainly in the Western world, are in this play. So that's the first takeaway. The second takeaway, which I think is incredibly important that everybody on this call, is those other discoveries to get to first oil is multiple billions of dollars to get to first oil. We get to first oil next summer, 2021. So we get to cash flow next summer. We moved our contingent resource to reserves as early as next summer. Again, I'll point out to you the 3C, that was a contingent resource by Oil Search, Armstrong, and Repsol. And then finally, I think of the point in that the chart where Jay was showing the cumulative what does a giant oil field look like in terms of cash flow, costs, and all that kind of stuff. Giant oil fields. That's why oil companies look for giant oil fields, conventional oil fields, because of the cash flow model that you were looking at before. I was with BP, Jay was with Larco, and certainly 30 years ago, the majors, we all went out and said we had to go find giant conventional oil because that was what these models look like. Unconventional oil doesn't look like that. So you talk about, I have 1 billion barrels of oil. That is not what an unconventional resource model looks like. Nowhere near. This thing will spin off a huge amount of cash flow, and it's completely different than the unconventional space. And companies are coming back to this model because of the low oil price environment, and that's why I think once we drill Talitha and we have that in our hands and tested, this is going to be, on everybody's radar. Sorry, I just wanted to make those points clear. Now I'll turn it over to the guys. I've just been informed for some reason that Roger has been cut off. Dad, can you take over?
I'm here. I can, and I think Roger texted me that there was a big thunderstorm rolling through his neighborhood, and he may come back on in a minute. He's actually trying to get on his phone, so let's wait just a minute if you can, please.
Yeah.
Dan, while we're waiting, would you mind giving your background and Roger's background, perhaps in relation to the Alpine field?
Yeah, Roger and I came together in 1992 when we were working at Union Texas Petroleum. I'm a geophysicist. Roger's a petrophysicist, seismic petrophysicist, and we worked together evaluating Union Texas's acreage position on the North Slope. And as part of that, we had 2 drilling seasons. First drilling season was not as successful as we would have liked, but we learned a lot from it. The second was where we drilled and discovered the Alpine field. And that was based primarily on 2D data initially. We looked at the seismic attributes of that 2D data. And with that, we ended up recognizing that the formation that we penetrated had a great AVO signature. Amplitude variation with offset, and it's some seismic attributes that were really unique to the North Slope at the time. People had not recognized that you could use AVO on the North Slope, but the reason was we found a different type of oil. We found a 35 gravity API gravity oil, and we made a map. Initially, we recognized that we had
By the way,
1 billion barrels in place. Are you there now, Roger?
Oh, awesome. Yes, I am here. We're in the middle of a big thunderstorm and things took me out, so I'm coming in on my cell phone.
Okay, well, good. I was just filling in and giving a little background on what we did. So anyway, let me finish this part and then I'll hand it over to you, Roger. So we found, we made a discovery well, armed with a lot of that information. We actually were forced by ARCO to increase our interest from about 10% to 22% interest in the field. We gladly took that, drilled some more wells, and then ARCO bought Union Texas Petroleum. So that ended UTP, but we learned a lot from that and have moved on to apply the technology that we utilized in Alpine in other parts of the world. And this is a perfect fit right in here. Whether we're exploring for the Shelf Margin Deltaics, or whether we're looking at the Kuparuk sandstone, these techniques are amenable to reservoirs that have a high API gravity oil and a little bit of gas in there to help the reservoir energy. Let me leave it at that and turn it over to Roger now that you're here.
Okay, can you hear me then?
Yeah, yes, we can hear you.
Okay.
And can you see the slides?
Okay, great, awesome. Yep, I can see the slides. We're just doing a hybrid here.
Okay, good enough. Cool.
Okay, so my story today starts with the Alpine field, and I'm going to show you why that Alpine discovery is so relevant to what's going on today at Pipeline and the Theta, the Talitha prospect. It's an amazing coincidence of the same thing happening all over again, that it's really fun, and it's an absolute privilege to be working with this Pantheon team on this project. Let's see, advance the slides. Yeah, there, whoops, that advanced twice. Okay, so there we are. So this well is a discovery at the Alpine field. It's the Bertrand #1 well. When this well was discovered, obviously the question is, where does the sand go? How do we map this sand out, and what's going on? Well, we used a technique called AVO, which stands for amplitude variations with offset. And we used that technique to get more rock and fluid information out of the seismic data so we can delineate the sand. We can see where it is better. In the meantime, ARCO was trying to do the same thing, and they decided that AVO doesn't work. So we were at an impasse because they were not even seeing a commercial reservoir. We were seeing a giant reservoir. So I remember very well having to fly up there one afternoon to sort this out suddenly. So we flew up to Anchorage, had a meeting at 9 o'clock the next morning, and ARCO presented us with an 11-page memo explaining why you cannot use AVO on the North Slope. Now, what's really odd about this, ARCO wrote the book on AVO. That's not an expression. They wrote the book on AVO. So we simply asked them, why don't you think it matches? Why doesn't it work? And they said, well, if you take the logs from the well and you make a seismic model, it doesn't match the seismic model that we have. Therefore, the seismic doesn't work. It's really interesting. If seismic is your understanding, you know all the error bars that exist in seismic, but you assume that the well logs are right. Now, a log analyst would think just the opposite. He would think, well, my well logs are wrong. The seismic's what's right. So I asked the geophysicist that said to us, seismic is wrong because the well logs don't match. What well logs did you use to make the model? And they said, well, the well logs. I said, well, did you correct the well logs for the bad wellbore condition that this well is in and the fluid invasion into the sand? And what is so amazing about this whole project is he said, no, we have a rule at ARCO. We're not allowed to correct the logs. Not allowed to correct the logs. Can you imagine? So you're going to use logs that are wrong to try to understand what's going on, and when they don't fit, you're going to assume that the seismic is wrong? This is insane. But this is the way big companies work. They work in silos, they don't cross disciplines, and they have this kind of craziness going on. This picture here shows you what they got when they made the model. Here's the sand. By the way, it's 45 feet of pay. It makes a seismic model that looks like this. And what's important is the actual data looks like this. They don't look anywhere close. But as soon as you change the logs and correct the logs for what you know is wrong, any log analyst would know that they're wrong. If their companies were in a siloed situation and they worked together, they would realize that this is very similar to this and that they do match. and there isn't this problem. So that's what's going on here. This story is now repeating itself. This well was drilled in 1994. What we're going to do now is take a look at, before that, I just want to make one quick point here. That technology that we created during the Alpine field of correcting the logs, correcting the seismic, conditioning the data, getting everything to fit together so we can understand where the reservoir is, that became eSeis, which I co-founded in the year 2000. And we've been now helping clients all around the world understand how to do seismic petrophysics and put the data together. And now that's what we're doing for Pantheon. So now we're going to move on to the pipeline state well. The pipeline state well is the key well to the Talitha prospect. And we're going to look at the logs that we've got here. We've got a set of wireline logs. We've got a set of LWD logs, logs that are acquired in different ways and at different times. And what you'll notice when I show you this next picture is unbelievable. What we have here in the red is a resistivity log from the wireline. And in the green is a resistivity log from the LWD. What we have to do when we analyze this well is put all these logs together. Right here, I've put the logs on top of each other, and as you see, they don't match there, and they don't match there. But if I simply move one down by 33 feet, they match. Here's before, and here is after. Really, really simple. My 6-year-old grandchild can understand this. If you are trying to analyze what's going on in making seismic models with logs that are 33 feet off from each other, you're going to get absolute garbage. The next step in the process is to look at not just the depth shift that was wrong, but to look at the logs themselves and how wrong, what difficulties they have. Each of these is the name of all the different logs that we run. And each of these logs, the raw logs, are in green. The corrected logs are in black. This very last track here is the caliper. This last track is showing what that wellbore looks like. It's not a gun barrel. It's all washed out. It's very bumpy. It's very verbose, as we say. Logging tools don't work when the borehole is not smooth. Some logs work okay. Some are an absolute disaster. And back in 1988, we didn't have the computing power that we have today to try to correct these logs and understand what's going on. In 1988, this well was drilled at the end of the drilling season. Not only did they not have the power to correct the logs, they had no time to even worry about it. They had to walk away from this well. And they only drilled it on 2D data to begin with. So they really didn't get very far with this well at all. But once you do the corrections with today's computing power and today's algorithms and today's understanding, we can make these corrections and fix everything up. So once we correct all the logs, we can then analyze what this well has. And what you're seeing here is over 2,000 feet of pay, the Shelf Margin Deltaic system here, which has been talked about already, and the slope fan, the basin floor fan, and the Kuparuk right here at the bottom. We're going to start talking about the Kuparuk at the very bottom. We'll start at the bottom and work up. Here is the Kuparuk fan. It's 45 feet of pay. Whole core was taken in this well. It was filled with oil. There was oil to the surface while drilling this well. So it's not a surprise that when doing the log analysis, we also find oil in this well. The next question is, where does that sand go? Can we map the sand? So we'll do the same thing that we do at the Alpine field. We correct the logs. We make a seismic model of the logs. We compare that seismic model with actual seismic that we have. And as you can see, there's a very nice match. This is a trough over peak. This is a trough over peak. They're both increasing with offset. They match nicely. we've got a good match between our bad logs that were corrected. Now they're good logs. Now we can tie them to the seismic. Now we can understand what the seismic is trying to tell us and use the seismic to allow us to map out the reservoir. So we use the seismic. This is in section view. This is seismic. This is going down to the Kuparuk. So we're down here at 10,000 feet. That's the horizon of the seismic. And we simply make a map of that horizon. And it gives us a map that looks like this on our acreage position of the Kuparuk sand. We can also take that one step further and map out what the thickness is of that Kuparuk sand. So the reds and the yellows, they're getting to close to 100 feet, maybe a little bit more than 100 feet. The pipeline well is right here in the blues, so they're down to about 40, 50 feet. Well, that's what this well has. So what we're mapping here is simply the rock that is thicker and better than it is at the Pipeline State well. We're keeping this as conservative as we possibly can. So we know there's a lot more here that's thinner than Pipeline State, but we're just going to map what's thicker than Pipeline State. So just to review the Kuparuk section, we had logs that were off depth. We had logs that were in terrible shape. One thing we did not talk about was siderite. Siderite is a very heavy mineral. The Kuparuk River field, the Kuparuk sand there is filled with siderite. That makes it very difficult to determine what the porosity is in those sands. From logs, it's difficult. From seismic, it's extremely difficult because it's a non-unique mathematical situation that you just can't get there from here. South of the Kuparuk River field, down in this area where we're talking about, the Pipeline State well and other wells in the area do not have siderite in it. This was a major discovery realizing this. So we have to use the seismic differently, almost in an opposite way to understand what's going on. In drilling the Kuparuk, there was oil up to the surface. There's oil in the core. The log analysis shows oil. The seismic model and the logs fit very well with each other. The seismic response here is the same as the seismic response for the Alpine field. And now we can map it and understand what's going on. Very, very cool. So the Kuparuk, we're looking at oil in place of this conservative mapping effort of just about 1.4 billion barrels with reserves of 343 million barrels on a very, very conservative estimate. Now what we're going to do is move up the hole. We're going to move into the Brookian section where we're going to be looking at 2,000 feet plus of hydrocarbons. So what we have here is a seismic line over the Pipeline State well. Down here is where the Kuparuk sand is. This is the Kuparuk. It's a sand from here to here. That's it. At Kuparuk River Field, it's the same thing. And it holds 14 billion barrels. We have 45 feet here, which is about the same kind of thickness you find at Kuparuk State, Kuparuk River Field. That's where the reservoir is. But now we're going to move up the hole. So we're going to look at the logs, and the log we're going to look at is the resistivity log. Oil is very resistive. Electric current doesn't flow through oil, but it does flow through salty water. That's the other thing that here is in the rock and the pore space. You either have brackish salty water or you have oil. And salty water is going to have lower resistivity. Oil is going to have higher resistivity. For example, here's the Kuparuk sand. Big high resistivity, beautiful. That's the Kuparuk pay right there. And when you look at the rest of the log, what you see is this high resistivity expression. To be able to see it, you have to step back and look at, this is 500 feet from here to here. This is 50 feet from here to here. You have to step back and look at this. If you looked at this at the well site and you're looking at 200 feet of log at a time, you might not even see this. But when you look at this like this, you can say, whoa, I have got something here that's really quite something. So you say, okay, that's interesting. But then when you realize that when this well was drilled, as soon as they drilled through this horizon, They had oil over the shakers. They had oil in 3 cores throughout this section, plus oil in the Kuparuk. If this is the only oil that's here on logs, how do we explain the rest of this? Well, let's look at it. Here's that thing I just showed you, the high resistivity expression showing where the oil is. If we back up and look at this even more backed up, instead of looking at 3,000 feet of log, we're going to look at 5,000 feet of log. That's what I was just showing you, just that. That is just the ear of this entire elephant that exists here. This is really, really something special. Here is the oil signature, here, and here's the Kuparuk. You have to stand back to see something this big. You don't see that when you're looking at the well site. Now, log analysis is a very interesting thing. We measure whatever we can, but we don't measure what we really need to know. What we really need to know is how much oil there is. Well, we don't measure that. Let's see. What we measure is resistivity. We measure the velocity of sound. We measure the response of the rocks to gamma rays. We measure the response to rocks of neutrons and what the natural gamma ray radiation is of those rocks. Do any of those sound like anything you want to know? None of them. But each one of them is a clue to what's going on in these rocks. And when you combine all of these logs together, you can solve them all together at once simultaneously and figure out what it means in terms of oil, porosity, the types of rocks that are there. What we're looking at here is the Alkaid oil volume. So this is the calculated volume of oil from Alkaid. This is 1 billion barrels of oil in place. That's Alkaid. This is what pipeline looks like. There's the Kuparuk oil, here's the rest of the borehole oil, and here's the Shelf Margin Deltaic oil. Unbelievable. It dwarfs Alkaid. Very, very interesting. Now, remember, Alkaid was only drilled down to here because of weather events. What is below Alkaid? We don't have a water contact. This is lowest known oil. So we know there's oil is continuing on down. We just don't know how far it's going on down. It might look like this, and it might have a Kuparuk down here too. It's fully expected to have Kuparuk down here. So pipeline's way bigger than Alkaid, but we don't even know how big Alkaid is. So back to what we've got here. Here's the resistivity of the Kuparuk. Here's where oil is in the Kuparuk. The black bars are where oil was flowing over the shakers while drilling. That's the core points from the conventional core of what is going on in the Kuparuk. And this is the big elephant that you can see. So you can see a great correlation between the resistivity and the actual oil that we know exists. So back to the Kuparuk and the pipeline comparison. Pipeline, Alkaid, the background trends. If you put one on top of the other, you can see the pipeline is just unbelievable compared to Alkaid. And Alkaid, we don't even know how far down it goes. Could be that way. So now we're going to move uphole. We're going to go up to the Shelf Margin Deltaic system, and that's pictured right here. That's an expansion of the Shelf Margin Deltaic. So that's what it looks like in logs, over 450 feet of oil. What we're looking at geologically is this pipeline state well, this Shelf Margin Deltaic system looks like this geologically. You've got the shelf here going down into the deep water. You've got like a river in here, a channel, an insides valley, and there's the delta front sitting down in front of it. The pipeline state well would fit in this section right here. If we moved up to here, that's where Talitha is going to go. Now, geologically, you would expect as you move up into this, you're going to have better quality rocks. So that's where we're going to start developing this field. We fully know that this is filled with oil, but this is going to be even better rocks. So we're going to move up here. We're now going to look at a seismic line down this way so we can see where pipeline is and where we're going to be moving. So here's pipeline. Here's Talitha, where we're going to put the well. That's up here compared to here. The green is the Shelf Margin Deltaic. And here's what we're going to start developing. We're just going to start developing from pipeline state on up. We know this is filled with oil. We know we've got all kinds of oil down here, but that's not where the best rock is. That'll be rock for someday. But up here, we're going to be developing this. And this is the map that we have of the Shelf Margin Deltaics that we're going to be developing. That was a geologic approach to trying to understand where the sand is. I'm going to show you now a seismic petrophysical approach to figuring out what that sand distribution looks like. What we have here is the logs. Here's the Shelf Margin Deltaics right here. We're going to go up dip and we're going to try to predict what's going to happen at the Talitha location. So this is the logic behind it. We know what the logs are here. We know what the rocks are here. We also know exactly what the seismic is here. So we have that connection. If we change the seismic a little, that infers that the rocks change a little. So by comparing what the seismic looks like at any point here to what it looks like here, we can figure out how those rocks would have changed. So if seismic changes from here to here, we know the rocks change from here to here. So we can make a section of what the rocks look like. We can make a section of what the rocks look like in terms of porosity or lithology or whatever we want to look at. In this particular case, we're going to look at what the rocks look like in terms of their porosity. So down dip here, you can see the density. It's this color, this amount of porosity. And as you go up dip, you see it getting brighter yellow, brighter yellow. The rocks are getting better. And then the rocks pinch out and terminate. So what's interesting is we know for sure that this section of 450 feet or so will thin as you come up here onto the shelf margin. Interestingly, it also predicts that there's going to be another development of sand up here. That was just barely seen here at Pipeline, but it comes on up and it predicts that that will be oil, could very well be oil bearing up here. So if that's the case, we're not even thinning. We could be up to 400 feet of pay here, but we're only counting around 100 feet of pay that we're going to find up here for those reserve numbers, which are already huge. So just to summarize that last two bit, we have a geologic understanding of what's going on, which is very well known, that what's happened, that this is the depositional environment that exists on the North Slope. There's no interpretation about this. We know what's going on. We know this is where we are. We know what's happening, and we know this is the kind of map that we should have. And now we have a seismic petrophysical analysis of exactly what those rocks are doing, and both of them are saying the same thing. That's what integrating data is all about. When you have multiple approaches at the same problem, and those multiple approaches all come up with the same answer, then you have a high probability of understanding what's going on. So what that does is say, well, in the Shelf Margin Deltaic system, we have certainly 1.1 billion barrels in place and a 300 million barrel reserve recoverable from LKA, Lee Keeling and Associates, our third-party reserve estimate company. This is a number that is subject to how we're going to go about developing the field. So it's because of development, it's a small number. It's not the total number of the whole area. It's just where we're going to start developing it first. So right now, what I just showed you, we're exposing ourselves to nicely over 600 million barrels on a very conservative estimate of what's going on with this pipeline well and what we expect to find up dip. So, Bob, Jay.
Thanks, Roger. That was I think that was really, really great. And that's, just like to add a couple of things to that. We're looking at, as Roger said, in the Shelf Margin Deltaic, up dip again, up dip in the better reservoir section. We're looking at 300 million barrels of resource from leak healing, and we know we have oil in the pipeline state, and therefore oil even down dip from where we're located. So, I mean, it's a really kind of like massive project that we've got our hands on here. And again, these last two numbers are just for two of the three independent targets that make up Talitha, and we'll get to the slope fan, but just these two by themselves, we're looking at, as Roger said, conservatively over 600 million barrels of recoverable resource. So, Roger, thank you very much for that. I think Jay probably wants to say, a few kind of words to wrap everything up before we get to the question section. So I'll turn it over to Jay.
Yeah, I just want to reiterate something, excuse me, that Roger said kind of toward the end. He said that integrating data increases your probability of success. And that's what eSize has done for us. They have integrated the data. They have increased our probability of success. And we have at least 3 and possibly 4 independent targets in the Talitha A well, each with a very, very high probability of success. So this is unlike any well that I've seen ever before. If you're an oil man, these are the wells you dream about drilling. In excess of 1 billion barrels, maybe a lot more than that, recoverable, that you would be verifying with a single well. It's really a dream that it's the gold ring that everybody in the oil business wants to do, and we're so pleased to have eSize and Roger and Dan on our team. It's very gratifying, and I couldn't say more about the work they've done. So that kind of wraps up our technical presentation. I know we had some technical glitches. You guys may not know it, but we spent 30 minutes in advance of this trying to iron out everything and make sure it was all working. Obviously, we need to do a little better next time, but hopefully you heard from Roger just how exciting this is. I mean, this is truly, as Bob said, we believe the most impactful well that anyone in the world will drill in 2021. So we've gotten some questions. Justin's going to kind of be the take over and ask some of the questions. Bob and I and Justin will be answering those. Possibly Roger or Dan if they're too technical for us.
Thank you, Jay. And look, I'll just reiterate again. Many of you might not know, but both Roger and Bob are dialing in on a telephone, without seeing the webinar live, trying to match up slides with us. So apologies for that. But look, we move on. The one thing you all have seen is that this is, it's incredibly exciting. Enormous amount of work has been done, and what is without question is that the potential of this play is quite special. I've got a bunch of questions here, Mr. Darkon. Thank you again, and I've had a bunch of questions that have come through live. What I will do is I'll flick through what I think are the most important ones and the ones that we haven't covered off during the presentation. And look, I've got to say up front, there's an extraordinary amount of questions. Somebody joked to me that we should call it a webathon rather than a webinar. Such was the list of questions, which I thought was quite funny. But let me crack into it. From the outset, there is a bunch of questions which we just can't answer because, as you've seen there, particularly with the information that Roger was presenting, there is a huge amount of intellectual property there. Roger and Dan were the architects of the Alpine field, the 3rd largest field in Alaska, and one of the 3 fields that's being talked about in the context of this potential tax regime. They're the 3 giant fields in Alaska. we are so blessed to have them on our side and believing in our project. But it's also for that reason that we just can't hand out certain information. We've had some questions requesting whether or not we would publish the Lee Keeling independent experts reports. And the answer is that we can't. We will certainly disclose the key information, but we just can't release that information to the competitive public, particularly in a backdrop where we've seen an oil price crash, a lot of companies that were happily focusing on unconventional, which is where all the capital markets have been, focusing their capital on over the last 10 years or so. That game is over, and a lot of these oil companies now need to reinvent themselves. Bob mentioned recently that we've had a company in the data room in the last fortnight that told us that they need to reinvent themselves. So we're seeing the landscape of the oil and gas market changing, and we need to protect this competitive position of ours. So with that said, I'll move into the questions. And I've covered a couple off. On that point, one thing I did make a note of is that the point I began the presentation with earlier on today, there's $250 million of sunk investment to get to this point. Now, Pantheon didn't spend all of that money, but the Great Bear Group did. We benefit from that because we own 100% of what Great Bear had, and we're very fortunate to have the key people come along with us. The obvious question on the table for everybody is, what is the status of the farm-out operations? Where are we? Bob, over to you.
So again, I think Justin answered the question when he said we again are having new people enter the data room. We're still in talks with people who have been in the data room, but until a farm out is done, it's not done. And we're dealing with national oil company. We're dealing with small companies. We've had a new sort of large company come in, so we're still in those conversations.
Thanks, Bob. I mean, there's probably not much more that we can say. We have stated recently in RNSs that we're continuing with this farm out approach, and we're aiming for conclusion to that, hopefully by the end of autumn, in order to be, able to be drilling this winter. We are aware of what our deadline is in order to achieve that goal, and certainly we're making that aware of the farm out, of the potential farminees. We can't guarantee an outcome, a positive outcome, but what we can say is right now we have live companies in that data room who are expressing interest and know that if we want to drill Talitha, and you've just seen on Roger's presentation what Talitha can do, everybody's focused. So we'll see, fingers crossed, but we're working towards it. That leads logically into the second question, which is an important one, and that is, what is Pantheon's plan B if a farm out is not signed soon? A really important question. Is drilling this winter contingent upon completion of a farm out? And the answer is, it's contingent upon our company having the funding by one way or another to drill that Talitha well. Now, the farm out is our preferred avenue, and that's the one that we're pushing and we're working really, really hard on. But of course, it would be naive of us not to look at all options, and that's everything. So of course we have considered them. We've considered those things for months, but right now we're pursuing with the farm out strategy. We think that would give us a really great outcome and achieve our mutual goals. We've got we've got a number of companies in the data room, various different sizes. Any deal that they would do would likely be of a different shape or size, given the unique circumstances of each of those companies. But they've seen the presentation that Roger gave in much greater detail than you've seen. So everybody understands what the prize is and what the opportunity is, and that's why we're pushing it. So the answer is, the farm out is our favourite approach right now. If everything fell over for one reason, would we consider other avenues? Well, we probably would. We're a sensible company, but we haven't done that so far because we're following through with our ambitions. So, the next question it's a good question. Are there any key regulatory clearances and/or conditions to completing a farm out? Jay, do you have any comment on that one? I think we
Just
lost Jay.
unmuting there, Justin.
sorry.
Yeah, no, it just took me a second to unmute, and the quick answer is there are none. So there are no impediments to us completing a farm out. I just note that Bill Armstrong farmed out to both Repsol and to Oil Search, and there were no real issues there. So we don't see anything on the horizon that could trip us up on a farm out.
Good stuff. Now, recently Pantheon hit a number of milestones with respect to this process called unitization. The award of production units over both Alkaid and Talitha. And in fact, we're kind of getting towards the end of that process at the moment. I believe today is the date for the last date for any appeals on the Talitha unit. And there's a bunch of different questions in relation to that unitization process. Bob, could you just explain what it means and why we think it's so important for our company? Because it's not just applying for a permit or applying. It's a real achievement. It's a big step forward. Can you please just explain how that process works, Bob, and perhaps capture up the key points?
What you have to realize is the state is the royalty holder on this acreage. The state is the regulatory body for the acreage, and the state is also it has a group of geologists, geophysicists, and engineer that technically assesses your work through this unitization process. There's no purpose for the state to award units to people who they don't believe are doing the proper work or not advancing the progress of ultimately getting to production on their acreage. There's none. There's zero advantage to the state doing that. So as part of the process, we had to not only just present to state officials, but we had to engage with the state's technical team to get their buy-in to what we were doing. And that was multiple presentations to them and setting up a virtual data room. And as a matter of fact, that process of setting up a virtual data room for the state actually helped in terms of setting us a virtual data room for the Farm and E partners. It was an extensive data room in which the state spent months reviewing our project and what our proposal was before they awarded us the unit, gave approval for the unitization process to move forward. So in there, there's some validation of our technical progress on that acreage. And as Jay talked about earlier, the state also approved in our appraisal / development of the Alkaid discovery, which we want to drill next summer. They approved to putting out a gravel pad to do that, which is a major milestone. That actually took us, several meetings with the state to get that approved. It's not just something that's foregone conclusion, because at this time, we don't have the full development plan in place because we have to do this long-term production test. So there was a large engagement by our technical team with the state's technical team to get the units approved. And in that, we now have we can say we have long-term tenure on this 70,000 acres or 68,000 acres. And as Jay mentioned earlier, it is the state that has said to us that we've given, this is a large chunk of acreage for a small company you've got, and they acknowledge that they think there's a large prize there for us to work out.
Bob, I know that you can't see the slides, but as you've been talking, I've pulled up the slide which shows the unit awards. What's of great interest there, certainly it was of great interest to me, was, we see the top two there, Prudhoe Bay and Kuparuk. What investors and participants should note is those fields were discovered in the 60s and put on production in the early 70s. So, we're talking nearly 50
Great.
years old, and little old Pantheon's, what's that, number 7 or 8 on the list here, sitting above Repsol.
Yeah.
So that unit size is a very significant unit indeed.
It's a huge number. I mean, you just have to look at it, and you look at the other people whose names that have been given units that are comparable. These are the largest oil companies in the world. So, for us to get this sort of unit is an achievement.
Yeah, somebody's asked the question following on from the previous one about a farm out, and that would be, if the farm out was dragging on, would a company or an oil company or an institution or a family office be able to come in and drill for a percentage of a working interest or a percentage of revenues? And the answer is, this is the oil and gas business. Anything is on the table, and we've had discussions with different groups about structuring a transaction in various different ways. So, nothing's done until it's done, but there's any number of ways to skin a cat. Bob, the next question, while I have you nearby, talks about Leonis and Theta West. We picked those acreages up in December of last year, and we reasonably soon thereafter disclosed that we had a management estimate of greater than 1 billion barrels of oil in place on that acreage, but we haven't said much more about it since. And there's two legs to this question. One, why haven't we said much more? Is it because we don't know, or is it because we've just been busy with other things? And two, leading on from part one, what do you think the direction of travel is for Theta West and Leonis, and when will that fit into your plans?
So the direction for Theta West and Leonis is we strongly believe we will have a resource upgrade there. We have, and there's somebody who asked the question, it's correct. We've been super busy on Talitha, the unitization, the farm out, and it's a very, very, very big program. So we'll get there, but I think the first step would be to get to the slope fan system, the resource for that. And again, as Justin said, that would be towards the end of this year.
Yeah.
So we're certainly working on that, but it can't be a top priority right at the moment. Getting Talitha drilled, getting the units, so we could get Talitha drilled were our major priorities.
Gotcha, Bob. And just moving reasonably swiftly through, our friends at 88 Energy drilled the Charlie 1 well earlier this year and had what was flagged as a disappointing result initially, but has since had some more promising, analysis done on it. What have we learned from Charlie 1? Anything that relates to our asset at all?
Yes, I mean, one of the things we've talked about repeatedly in the past is where our acreage is in relationship. Why we have the southern boundary to our acreage, and the southern boundary to the acreage had a lot to do with oil, sort of the oil charge, the thermal history of the source rocks. So when we heard that there was gas, I'm not sure, I haven't looked in detail at the most recent announcement, but the idea there's gas condensate, and then oil in some of the shallower parts of it, that is exactly what we would have prognosed, certainly for the deeper reservoirs and, in the Brookian and in the Kuparuk.
Mm-hmm.
Second point is, again, as you go to the south, there's this depth of burial, the original depth of burial. As you go to the south of our acreage, there's been a greater amount of uplift as you go to the south, which means that the rocks that are the current day depth are buried deeper than the same depths that we're seeing in our acreage. So again, no surprises. But onto the detail, the detail, internal detail. I haven't seen the internal detail. The there's no major surprises for us.
Good
Again,
stuff.
I think it confirmed our source rocks.
Good stuff. Bob, look, I'm conscious of the time, so I'll try and wrap up reasonably quickly. A couple of questions, and I'll whiz through a couple of them at the same time. Somebody's asked about when we're reporting our financial reports. Look, they're scheduled for end November, early January, early December time. Auditors are all working remotely at the moment because of the social distancing and so on. So just depending on their progress. Really quick question: what are we doing about PR to attract a wider audience to the story? Look, this is a really, really important point. We have, you'll all notice, kept a very low profile over the last 12 months. We've only recently put our head above the parapet in the last few months. Part of that was by design. We had a head down doing all of this geology and geophysical work, some of which Roger presented to you today. But we've now realised that this is the time to present our story, particularly to US investors. I mean, typically UK companies don't have great penetration into the US, but we've got not only a US oil and gas asset, but potentially a very, very large oil field if we have some success there. And it makes sense that we should increase our awareness to US investors. So we have hired a US based PR guy to help build that profile for us. That's just a new hire, so hopefully you'll be seeing some results of that reasonably soon. You will have seen we also made some press with our PR guys at Blytheway, who do a fantastic job. Maddie and Megan in particular have been helping us a lot and have helped build our profile and our awareness to in the US in particular, in some of the Alaskan press. And that leads to the next question, which all investors like to hear, and that is what news flow can we expect from Pantheon over the next few months? And there's a lot, and some of it could be quite material, but we can't give definitive dates. We have the Shelf Margin Deltaic. Roger showed you a chart there, and we've spoken about it in our RNSs. That resource determination that the experts at Lee Keeling gave us was only on the up dip section. It excluded the down dip section. We internally are working on that down dip section, and we'll be reporting that number in due course. And Bob, I have a question for you on that in just a moment. The second piece of news we have to come is the slope fan system. You've heard very little about the slope fan system. That's the section in the middle. It's shallower than the Kuparuk, but deeper than the Shelf Margin Deltaic. We'll have a resource estimate out for that at some point in the future as well. We have a research initiation report from a local UK-based broking firm. That's probably 2 or 3 weeks away, I would think, something like that. It's not our house broker. It's another broker that with a really good analyst there who's written a report. I saw a draft of it the other day. It was 65 pages long. So he's put some blood, sweat, and tears into it. We have Theta West and Leonis. Bob touched upon that earlier. Again, potential for some quite significant some news in relation to those. There is the unit awards. We've gone through this process so far, but we haven't yet formally been awarded those units for Talitha and for also the Greater Alkade unit. Hopefully that will be in the not too distant future. If that appeal period for Talitha closes today, that shouldn't be too far away. Of course, the big one will be farm out or drilling news. One will lead to the other. That's slightly out of our hands. We're giving it everything we can. We have some really high quality people interested, so all we can do is continue to work our hardest to try and reach a conclusion for that one. Now, Bob, I touched upon the down dip of the Shelf Margin Deltaic. One of the questions that's come up is, well, why did you only focus on the up dip section? Why didn't you focus on the down dip section before? Why didn't Lee Keeling express a view on the down dip section? Can you explain that, Bob?
Yes, I mean, the reason for that was, as Roger's work highlighted, it so happened that in the up dip, and again, you want to be drilling up dip from a discovery well. That's one of the good things to do. In the up dip location, it's where we expected geologically to see better reservoir, and through E-sizes and Roger and Dan's work, we actually are seeing better reservoir. And the reason we focused on was that in in this sort of low oil price environment, the better the reservoir, the lower your sort of break-even costs are. In other words, you can in the reservoirs that we see up dip, we can actually develop these with much better efficiency, and can survive in a low price environment. So the 300 million, and again, our numbers are higher, but the 300 million given by Lee Keeling has, even in this environment, has a $2.6 billion NPV. And that's enormous.
Yeah.
That's going to be attractive to people.
It's this term, Bob, that we talk about a lot internally. It's this concept of high grading, and we do it all the time. Even in terms of our broader portfolio, we high grade. While we're on that subject, I'm going to pass over to you, Jay. Speaking of high grading, can you give us an update on Texas? That was historically our major focus before we acquired the Great Bear business, and we've really given little attention to Texas over recent times, and investors have heard a lot less about Texas. Can you give our shareholders an update on how we're viewing, as a company, East Texas at the moment?
Well, thanks, Justin. Yes, we've spent very, very little time on East Texas over the past year, and you guys can see why now. We have a very small team, so we have to really spend the technical time where it makes the most sense. And North Alaska, the North Slope of Alaska, simply dwarfs our potential in East Texas. In addition to that, natural gas prices have rebounded a little bit in the U.S., but they're still reasonably low. And the storage numbers that came out last week, the storage is above the 5-year moving average, well above the 5-year moving average. So it's hard to imagine that natural gas prices are going to go up from these levels. Part of the recent uptick probably has to do with all the hurricanes that have been going through the Gulf of Mexico, but we just don't see that East Texas can compete with what we have in Alaska, so we are spending our precious resources on the North Slope.
Jay, just on that, a really important point, and I'd like you to answer this if you can, and that is, part of that decision, it's part of just the enormous size, but also quality of the Alaskan assets that we've been fortunate to pick up. But secondly, it's about commodity prices, this macroeconomic environment we find ourselves in. How is Pantheon and its asset base positioned in this low oil price world?
Well, that break-even chart, and we assumed our break-even was a 9% rate of return. So that to try and emulate a little bit of other people's G&A. We have such a small G&A, we're not sure exactly how much we might add, but if we assume a 9% rate of return, that's adding a fair bit. But our Shelf Margin Deltaic has a break-even below $30 a barrel. We can compete with anyone, anywhere, and it is big. As we've said, the Lee Keeling report gives us 300 million barrels. Our own internal estimate was 483 million barrels recoverable just in the up dip portion. You guys could see it all. The down dip portion is thicker. The reservoir quality probably declines a little bit, but we have an enormous resource and recoverable resource in this area. And as I talked about Prudhoe Bay, we all can see from what happened at Prudhoe Bay that once you start a development, you figure out ways to make everything else more economic. And we've done all of our economics on standalone. We haven't assumed shared facilities or anything like that. So all of ours are on a standalone basis. This is, we believe, such an enormous potential, such an enormous oil field. It's only going to get bigger and better, and we will drive those break-even costs down over time, I believe.
So Jay, on that, the next question, I'm showing this chart here, this cash flow analysis, and again, this is not hyperbole, and it's not about that at all. This is, for the avoidance of any doubt, this is just the league killing development model, which has been put into a chart format. And forget the numbers, because there's many variables, and we need to complete a farm out or otherwise be funded in order to drill this program out, and so on and so forth. But this shows how a field like this is developed. And Jay, this is what you, coming from a big oil company, you've spoken to me many times about this chart. This is what big oil companies are looking for. And we can see this point here. I'm not sure if you can see my cursor, but just at year 4 here, the cumulative cash flows are coming positive, and this thing just starts to become a cash generating machine at that point. Is this something that would be attractive to bigger companies, and how does that impact Pantheon's exit strategy, Jay?
Well, this is something that this moves the needle for any company. When you talk about one single reservoir and one single part of one single reservoir that can generate over $500 million a year, that becomes attractive to anyone. And if you've got multiple stacked reservoirs, it becomes even more attractive. This is what the big companies look for. They like to get into these kind of projects. We developed it so that your negative cash flows don't overwhelm you. The highest negative cash flow is under $300 million. This will attract the biggest oil companies once we've drilled our next well. So our exit strategy, I think, is going to be kind of laid out for us. I think once we drill that well, other people will come knocking on our door.
Brilliant. Look, guys, I think I'm conscious of the time. It's getting late over here in London. I'd like to thank everybody for their contributions. Dan and Roger in particular, special guests. Thank you very, very much for your help there. Jay, Bob, thank you as always. In signing off, I'd like to just ask Jay and Bob, and perhaps Roger, if I could be so bold, just to sum up in a couple of sentences, what attracted you, firstly, Roger, what attracted you to this project, Roger, and has your understanding or your belief in it, or perhaps your enthusiasm for it, evolved as you've been undertaking this work over the last 12 or so months?
It's interesting when Jay said big reservoirs get bigger and lousy reservoirs tend to get smaller. From the very first week, I looked at this area and looked at what they had and started putting the logs together with the seismic. I thought, well, this has got some potential. And the next week, well, this has got a little bit more potential. And the more you work it, the more exciting and bigger it gets. It's a very, very special project. I haven't seen anything like this in my whole career. It's a privilege to be part of this.
Roger, thank you very much. Bob, may I ask you the same question?
My goodness, Justin. I think of it. I think of it as. I think of it just as Roger said it. I've been working this for 10 years, and it's just continually gotten better as we moved along. So I've been involved with this since day one, 10 years ago, and here we are today on the cusp of drilling a well that is world class. Even if you're drilling this well in the Middle East, it would be world class. So I mean, it's just a remarkable place to be.
And thank you, Bob. And Jay, is signing off as the CEO, is there any sort of
Yeah, well, it's a little bit of a story. So when Bob first approached us, we had a meeting with Bob and Michael Duncan, Philip and I here in Austin. And Philip and I were completely skeptical. We were saying, Alaska is a place for big boys. And we're just not sure that Pantheon can do this, that what have they got? And we got a little bit intrigued, and we got a little more intrigued, and kind of like Roger, the more you get into it, the more you realize that this truly is something special. And all I can say is, what a way to end my career will be to drill this well, and then to see it going forward. It's an amazing end and it'd be, it's a real privilege.
Am I allowed to say the same thing, Jay, or am I too young? Anyway, guys, look, thank you very much. Thank you, everybody. It is late on a Monday evening. We really appreciate your efforts, and we do apologise for some of the technical issues earlier on. We promise to improve them next time. But thank you very much. Any questions? As always, we do our best to answer them within the limits that we have. So, thank you very much, and good night.